Hello and welcome to September 9th Alpha's KR 289. Also, Stochastic took a hit today at minus 15.6 because of a drawdown, and the SPY dropped from a 22.3, I think it was, now to 21.7. So let's go on to KR. Here is KR. We have entered the Doji zone. I mentioned that yesterday. Down we have a Dragonfly Doji here, and it's similar to a hammer. It's the same criteria: long wick, small body. So we're looking at anticipation that we're going to be looking for a price rise, but it's kind of hard to judge it here, because I'll tell you why. Our RSI is dipping, and Stochastics is dipping, and so his MACD down below dipping. So anticipates probably some more price action to drop, but I don't expect it to drop much lower than the swing low that we're seeing here on Dragonfly. And again, our stop is now at 43.20. So if this was to reverse the spike down and take us out, I'll be happy to trade over, KR's off the books, and we will collect a bit of a profit to go against the ode. And that's where that's going to be standing at. Okay, going on now to PG. PG fell out of the 100R club by 0.52%. It's 100, it's 100 ROI, it's 100 ROI. So let's see what happened here. We got up here and it tried to break the high here that we had yesterday at 144.94, and it wasn't able to break through, and then it fell back. But it's still above the 10 EMA line, and also too, the price is above the 10 EMA line. So we have two possibilities that this might be going into a seesaw in and around the 10 EMA as the 10 EMA creeps up. Now, down below in the indicator zone, Stochastics did draw back, RSI did draw back. We have our stop is on, this is the first ratio, it's right there. And so we're here now. Remember yesterday, I also brought this up about TLRY, and that is, we've been in this trade now a month plus. And one of the rules that was used in the earlier trading options was that when it reached the 30th day, that we would be looking for we were looking for swing low, and at reaching the 60th day, we would go last bar low. That rule just might have to be applied here with the DTE trade, date to expiration trade, for that very reason that we're now in these getting into these sideways patterns. The option gets very long, but then it defeats the DTE. I mean, that's the whole purpose of DTE. DTE is the anticipation that the market's going to go up 70% of the time, which it does. So it's going to be really a tough one. And this trading strategy on date to expiration, it's really fairly new. I know that we are really behind on our 8-ball right here, but once we can get rid of these laggers, these three laggers, especially AT&T, which will be expiring in October. So that is a 30 days plus 6, so it's 36 days away, and then this will come to a conclusion and be done and get off the books. PG then will exit, providing, and hopefully will stay in the positive to return to some profit along with the buying power back to the buying coffers. As you can see, we have 283 in the buying power. And I'm going to explain that what happened was that we had two exits today. In fact, I should go ahead and reset this. And I have to reset it back because I apologize for this being so late today. And the reason why that we are so late is because I was away at conference. I'm at the IMN.org conference in Manhattan Beach, and met some very good people. And this is a finance portion known as non-qualifying mortgages. It's pretty much for people who have substantial assets but don't have income. And banks like to see income when they lend out money and not necessarily assets. So non-qualifying mortgage is a portion of the finance field that satisfy those people who are asset heavy and income short. So that's another deep topic that we can explore at another time. It is late. As you can see, it's running close to 10:24 p.m. on Thursday, 9/9. And also, too, that the computers have turned over, which turn the clock back 2 days because of the fact is that the computers have turned over. So ATVI, take that off, and you can see that we got stopped out of DBA and ATV. But let's go on to the positive start of the storyline. So PG is has the first ratios here, and this is an expiration, October expiration. So maybe that 30-day ideal rule was not going to have to necessarily work here, especially if we want DTE to work. It becomes a conflict. This conflict could be that if you're not in positive territory, such as TLRY will be a very good candidate saying if you're not in positive territory by the end of the 30th day, we're out of the trade, done, because we can't afford to be having time decay, and that's what you're showing here. TLRY is dying ever so much in the option. Remember, options have a limited time period, and then they go to expiration. That's what DTE stands for, date to expiration. And then we have date to expiration trading plan, which means we ride it until we reach that DTE. Now, case in point, though, KR reached a 10-to-1, and 10-to-1s are not common and they're very lucrative. So that might have to be considered for an escape plug, because the whole idea about DTE is to make big money. That's it. There's nothing else there. We're not here to prove a theoretical or academia type of question. We're here to make money, bottom line. So again, this is a whole new trading thing for me. I have not done DTE trading in the past. So you're seeing my results as it happens, and then there's a determination of this trading plan worked or doesn't work. So that's what it becomes important, and that's the whole premise of my thing. Does it work? Essentially, the Ninja, I think it's Ninja. No, it's not. It's some blender, and the blender has a video out there that says, "Does it blend?" Well, does it work? Does it produce money? If it doesn't produce money, then we are not interested. And remember, too, if you notice on the opening slide, SPY is at 21.7. So that's correct. If you had put your money into SPY on January 1st, you would be 21.7% ahead today. And we have make up. So we have a lot of lost ground to make up as soon as we can get rid of these dead weights. That is AT&T come this October, then Yelp out in November, and then TLRY in December. And once we three are gone, then as you can see, we are going to be, we use stops. DDA got stopped out, ATV got stopped out, and it returned buying power. So we have scanner time. We're going to have to run a scanner and find out something positive here. All right, let's get on to the more positive territory and get this put to bed. XLC did clear the first ratio right there. It cleared the first ratio. It's coming down now. It's made it's made one attempt to break through support, coming down and breaking, and is now testing support again. But if it touches 84.40, we're out, and we'll pick up some kind of profit, not much. But the bottom line is that we'll be able to add money back to our buying power. So that's what that's at. CVS is our put. Now this is good because we don't have a lot of puts. Now for those who are not familiar with options, when in options is that you are essentially putting your money thing. I believe the stock is going to go up, and that's called a call, going up. If you believe the stock is going down, then it's called a put. Here, the scanner said that this was going into the put. That's my scanner came up and says puts. This CVS is a put, and we are here. Now, what we need now is to clear that first ratio right here, and then we can go to EPS. So that's where that's at, and that is really the conclusion of tonight's report for KR at 89%. And I thank you very much for stopping by, checking it out. Any questions, any comments, please stop and please go ahead and drop them in. With that, thank you very much for checking it out. Bye-bye.